Gold and silver markets are closed right now. 60 hours, no price discovery, no ability to act. And in Islamabad, Pakistan, one of the most significant geopolitical binary events of 2026 is unfolding in real time. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, the Monday open for gold and silver carries gap risk of $100 to $150 in gold and $3 to $6 in silver in either direction. Let's get straight into it. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today: the Islamabad talks. Iranian Foreign Minister Araghchi arrived in Islamabad, Pakistan on Friday evening, April 25, 2026. Pakistani government sources cited a high likelihood of a breakthrough in U.S.-Iran negotiations. Gold last closed at $4,709 per ounce. Silver closed at $75.70. Both markets are now dark for approximately 60 hours. The Federal Open Market Committee meeting begins April 29th. That is 2 trading sessions after Monday's open. The concentration of catalysts in this 72-hour window is the unusual detail. Not one event. 3. Islamabad talks. Monday open. FOMC in 48 hours. The timing is what deserves scrutiny, not any single event on its own. The timing. Think about what that sequence actually means. The ones paying attention already know what to watch next. Before I show you the full data picture, consider this. The last time gold faced a binary geopolitical resolution event over a closed weekend, it gapped more than $80 on the Monday open. The data is already telling you something. The setup today is larger. Let's build it out. Now let's build the full picture, because the Islamabad talks do not exist in a vacuum. The Strait of Hormuz, confirmed by the U.S. Energy Information Administration, carries approximately 20% of daily global oil supply. Since the effective blockade began, Brent crude has held above $90 per barrel. That number is not a backdrop. It is the engine driving every macro variable that matters for gold and silver right now. The U.S. Federal Reserve holds its funds rate at 3.50 to 3.75%, confirmed by CME Group FedWatch data, with a 99.5% probability of no change at the April 29th meeting. But the statement language is the variable. Federal Reserve Chair nominee Kevin Warsh testified before the Senate this week. His hawkish posture on inflation, on the public record, signals that cuts may be off the table for the remainder of 2026 if energy prices stay elevated. The U.S. dollar index, reported by ICE at 98.57, sits at a level where a 2-point move in either direction changes the entire short-term metals picture. The rate of geopolitical escalation is not slowing. It is the primary variable. The data is doing the talking. The ones who were dismissed for flagging the Hormuz blockade as a metals catalyst, they are not saying much right now. And here is what makes that picture even harder to ignore. Gold is down approximately 3% on the week. Silver is down approximately 7% on the week. Both metals have sold off into this weekend under pressure from elevated real yields. The 10-year TIPS yield sits at 1.89% per Federal Reserve H15 data, and dollar strength from the DXY at 98.57. At the same time, COMEX registered silver stands at 77.1 million ounces with a coverage ratio of 13.9%, and May 1st notice day arriving 4 trading sessions away. That is not a contradiction. That is the setup. Paper markets have sold both metals. Physical markets in Shanghai are paying 12.5% above Western spot, a $9.56 premium per ounce for real deliverable metal. And before anyone takes that divergence as a guaranteed green light, setups can take time to resolve. The Islamabad outcome is unknown. The FOMC statement tone is unknown. Anyone who claims to know the timing of resolution is selling something. Now, the Strait of Hormuz. Because this weekend, it is no longer a backdrop. It is the deciding variable. Here is the math most people are not running. 20% of global daily oil supply, through one strait, controlled by a single actor. If that strait reopens credibly this weekend, Brent gaps lower by 8 to 12% on the Monday open. That is the Energy Information Administration's own supply concentration data. Markets are still pricing a partial stalemate. Look at Brent holding above $90 and tell me what probability you put on a full resolution. If a credible peace framework emerges from Islamabad, inflation expectations drop immediately. The Fed gets room to signal cuts. DXY falls below 97. Gold's first-order reaction is lower. Safe haven demand unwinds. Silver's first-order reaction is also lower. But physical demand from China at $86 provides a floor. When markets start pricing a genuine Hormuz reopening, gold reprices lower before it reprices higher. Silver follows, but faster and harder in both directions. That is the historical pattern. Every time a geopolitical binary has resolved over a closed Western market weekend, the gap has been violent. It has not been different yet. Gold Western spot at $4,709. Silver Western spot at $75.70. Shanghai Gold Exchange Silver Benchmark, $86.06. A $9.56 premium, 12.5%. Here is the only short-term read that matters. If Islamabad talks collapse and no framework emerges, oil holds above 90. Stagflation narrative intensifies. Gold gaps higher toward 4,800 to 4,850 on the Monday open. Silver, after initial volatility, targets 79 to 82 as physical demand absorbs the geopolitical risk bid. If a credible peace framework emerges this weekend, Brent gaps lower 8 to 12%. Dollar surges. Gold drops 3 to 5% toward 4,450 to 4,500. Silver drops 5 to 8% toward 68 to 72 on the initial impulse. That is the only short-term read that matters right now. As for trading either direction into this weekend, I cannot see a clean picture. I cannot tell you what gold does Monday morning. Nobody can. The gap could be $100 in either direction before you can place a single order. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. 1. A credible Islamabad peace framework removes the energy inflation premium and sends DXY above 100, pressuring gold toward 4,450 and silver toward 68 to 72. 2. The FOMC on April 29th issues a hawkish hold statement citing persistent Brent-driven inflation, lifting real yields, and further compressing gold's appeal as a non-yielding asset. 3. The majority of COMEX May silver contracts roll or cash settle rather than triggering physical delivery, removing the first notice day pressure that the bull case depends on. The bull case is equally real. 1. Islamabad talks collapse, oil surges above $95, and gold gaps to 4,800 to 4,850, while silver reclaims 79 to 82 as the stagflation trade returns in full. 2. COMEX registered silver at 13.9% coverage with paper leverage of 7.2 times faces accelerating physical delivery demand over the next 4 sessions, forcing a repricing that closes the $9.56 gap with Shanghai. 3. DXY fails to hold 98.57 and breaks below 97 regardless of the Islamabad outcome, as foreign central bank dollar diversification, documented in the Federal Reserve's own reserve data, continues to structurally weaken the greenback. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. This weekend is the clearest example of why position sizing matters more than direction calls. The structural pressure in silver is already built. 13.9% coverage, 7.2 times paper leverage, 12.5% Shanghai premium. The gap risk in gold is already quantified, $100 to $150 in either direction on Monday's open. The only question the market cannot answer right now is which direction, and that answer is in Islamabad. Don't take my word for it. Verify every number I gave you today. Check the U.S. Energy Information Administration for Hormuz supply concentration data at EIA.gov. Check CME Group FedWatch for Fed rate probability data at cmegroup.com. Check the ICE US Dollar Index at theice.com. Check the Shanghai Gold Exchange Silver Benchmark directly at sge.com.cn. Logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.